Welcome back to our weekly update. I'm Charlotte McLeod with the Investing News Network, and I'm here to give you a quick look at our top stories for the week. The summer is typically a slow time for gold, and this year July is hitting the price hard. After starting the month at about $18.10 per ounce, the yellow metal has declined more than $100, this week even dropping below the $1,700 mark. It was trading at around $17.10 at the time of this recording on Thursday morning. We spoke last week about how tighter monetary policy and a strong US dollar have been weighing on gold, and these issues remain front and center, especially after the European Central Bank's 50 basis point rate hike this week. Its first in 11 years and its biggest in over 2 decades. And of course, another US Federal Reserve meeting is also quickly approaching. It runs next week from July 26th to 27th. I had the chance to speak with Gerardo Del Real of Digest Publishing, who shared his thoughts on the Fed's next move. In his opinion, the central bank is likely to hike by 75 basis points, but it might go as high as 100. He noted that midterm elections are coming up in the US, and he thinks the Fed will rein in its hawkishness by then. Although he admitted that investors may be tired of being told to be patient, Gerardo said this is key when putting money into the market. It's definitely important to have a timeline in mind and an idea of what returns you expect to achieve. I also had an interesting conversation with Mark Yaxley of precious metals dealer SWP. He said while gold's low price suggests demand is lagging, that's actually not the case. Physical metal buying is 60% higher than his company had expected for this time of year. He pointed to high premiums as proof, saying that producers and suppliers want to move inventory and will only boost premiums when demand is strong. In terms of whether now is a good time to buy gold, Mark said many investors who already own the metal are struggling with this question because they don't want to catch a falling knife. This is an individual decision, but he does see indications that we may have reached a point where a price floor is settling in and downside is limited. With the Fed's upcoming meeting in mind, we asked our Twitter followers this week how much they think the central bank will hike rates. The poll was ongoing at the time of this recording, but most respondents said 100 basis points. We'll be asking another question on Twitter next week, so make sure to follow us and share your thoughts. I want to close out this week's video with a quick note on INN's quarterly updates. Now that Q2 is over, our reporters are reaching out to experts in the many industries we cover, from gold to lithium to cannabis and more. Their goal is to give our audience a look at what's happened so far in 2022 and what's still to come. This week we published updates for zinc and cannabis. Zinc had a strong start to the year, with prices rising about 25% from January to mid-April. They've since pulled back, but a recovery is expected in the third quarter. For its part, the cannabis market remains difficult. As we've discussed previously, the consensus is that US companies are better positioned than their Canadian counterparts. However, with federal legalization still up in the air, even their prospects are limited for now. That's all for this week. If you like this video, make sure you subscribe to our channel and turn on notifications so you don't miss future updates and interviews. You can also follow us on social media or click below for our free report or any article mentioned in this video. We'll see you next time.